if we can be a major force in revitalizing downtown Jacksonville, then we can help raise population levels in downtown Jacksonville. When that happens, it helps raise rents in downtown Jacksonville. When that happens, more amenities come into downtown Jacksonville, bars, restaurants, things that people like to do. And it creates this flywheel effect of more people living and working downtown. And when that happens, more employers come in and median incomes start to rise. Median incomes rising are so critical for long-term growth and long-term return on investment.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 349. Over the past 2 years, today's guest has acquired 19 city blocks in Jacksonville, Florida's urban center, with the goal of creating a thriving, walkable downtown. Why? Because by helping make Jacksonville a place where people want to live and work, Gregg Cohen and his team hope to raise the median income citywide. This benefits everyone who lives there, and in turn helps his investors increase their return on investment. Today, we're going to learn more about Gregg's strategy of building neighborhoods, investing in the city he loves, and why he's bucking the trend of buying across multiple markets. Gregg, welcome to the show.
Thanks so much, Brian. Happy to be here.
I'm really excited to have you on the show because I think our topic today is so fascinating to me. And that is you've concentrated all your firepower on one location, one city, and this neighborhood. And you were telling me before the show, you own like 19 city blocks, which blows my mind. Tell us a little bit about yourself and how you got to this point.
If you'd asked me, let's say 10, 15, 20 years ago, if I thought that I'd be a part of the revitalization of downtown Jacksonville and it had gone so strong into acquiring 19 city blocks in a 2-year span in downtown Jacksonville, I would have told you you're crazy. That's not where I came from. Originally I was a guy who went to college and thought I'd be working my way up the corporate ladder. And my first job was in corporate America. That's actually what brought me to Jacksonville 17 years ago now to start my investing journey. But that corporate thing didn't work out. And what that led me to was learning about what an amazing asset class single family rental properties are and the concept of buying and holding over a full market cycle. I just think it's the asset class that produces the best risk adjusted returns on investment over the long haul. And so, my story started really in investing in buying about 40 single family rental properties with my business partners in 2006 and 2007 here in Jacksonville. And that was a time when, real estate was on fire. Many people were in the real estate game at that point. Many people were buying properties, both rental properties and properties to flip. And then, of course, we know what happened in 2008 through 2011. The market crashed and really sent almost everybody out of the real estate game at that point, except for myself, my business partners, and really those folks who understood how to mitigate risk when you're buying rental properties as well, which is to buy properties that produce positive cash flow. So we learned a lot of lessons through those times. And, we were investing in those 40 rental properties. We were also doing some other things as well. And it forced us to look at what was really working and what wasn't. We knew that rental properties were working because even though market values fell, rents continued to come in, whereas the other things weren't working so well. So we really solidified our business model at that time to focus on building a rental property portfolio, coupling that with property management services, which we provide, and starting to do this for other investors. And so we built our business, JWB Real Estate Capital, on that idea, where if we could take this experience of helping folks build a rental property portfolio and ease some of the problems or the obstacles that many people face when trying to build a rental property portfolio, then we could do a lot of really great things for people and make a very nice business model for ourselves and for our team. And so that's really been our journey for the last almost 17 years now. Been blessed with the clients we get to serve. We serve over 1,300 clients now. They come to us from 49 states and 13 countries and all invest with us just here in Jacksonville. We're fully committed to one market here in Jacksonville. And we manage about 4,500 single family rental properties here. And that comes out to about $750 million in real estate assets that we're responsible for. So that's a little bit about our business, which of course, that devotion to Jacksonville is really the springboard for our commitment to downtown Jacksonville.
Is your asset class solely single family rentals?
Yeah, that is what we're all about.
During that time, did you ever dabble in like multifamily apartments, any other asset classes?
Oh, we've done a lot of dabbling. Our history in 2006 when we started, I didn't come from a real estate background. I didn't come from money. I didn't come from experience in my family or my business partners. I mean, quite honestly, we read a book called Rich Dad, Poor Dad, which I'm sure many of your listeners have read. And it moved me. It changed my life. And we surround ourselves with great mentors. And so we tried a lot of other things, wholesaling, lease options and seller financing and flipping and all of that good stuff. And what we found is that we just landed on single family rental properties as the best asset class for us. We felt that it was the best long-term for our clients and also something that we could do really well in here in this market in Jacksonville. Specifically on multifamily and apartment complexes, I'll just talk about multifamily. I love multifamily as well. The housing stock in Jacksonville for the neighborhoods that you want to be in does not lend itself to multifamily. There's just not a lot of opportunities. These were neighborhoods that were built in the 50s and 60s and single family type neighborhoods. And so if there were more opportunities for multifamily in Jacksonville, like there are, let's say in the Northeast, then we would be doing more multifamilies. For us here in Jacksonville, just because the housing stock is just not really a thing. And apartments for us, we do have some investments personally or with the company. We do some of those things with our own money, but we're really, really slow to bring that to our investors. We really believe we should put our own money into it, figure it out, figure out the good things, figure out the challenges before we bring it to our investors. And so we've really hesitated to bring any type of apartment complexes for investments to our investors just because it's not a fully thought out and fully experienced model for us where we feel confident bringing it to our investors at this point.
You're all in on Jacksonville and you're all in on single family rentals. And what fascinates me though, is you're also in on building neighborhoods and kind of placemaking to some degree. So talk about the dynamics there. I mean, as you got into this, as you started building that portfolio in Jacksonville, what did you see in the neighborhoods and the areas you were buying that allowed you or kind of made you think, hey, we should control like 19 city blocks here in the urban core? Or is the urban core or the downtown area of Jacksonville? I mean, what are the dynamics there in Jacksonville that you're working within?
Our thought process is, how do we produce the best risk-adjusted returns on investment for our clients over a full market cycle? And so, we've been in business for over 16 years. We hadn't gone so strong into buying a lot of downtown until 2 years ago. And you might say, well, why now? Well, a couple of things. This asset class in Jacksonville just stands on its own as being a wonderful opportunity for investors to invest in compared to the other alternatives, the other markets out there. And so let's just kind of analyze that first, right? The three things that you need to look at when you're choosing the right market to invest in single family rental properties are, number one, you have to have low prices. Right? You need to look at what the median home sales price is in your market compared to the national median. And Jacksonville is well below the national median. So that's a great start. Then you need to find high rents. And Jacksonville, of course, is positioned really well here. Our median rents are higher than the national median rents. And those two are the place that you start, because when you have low prices and high rents, then you have an opportunity to buy an asset that can pay for itself every single month. Right? You have an opportunity to create positive cash flow, which is really critical for this investment. So Jacksonville has that. Then the next thing to look at, and this is where many investors just fail. They don't go to this extra step, but it's something that I would absolutely encourage all of the listeners to do, is to look at which markets have the best chance for growth over a full market cycle. And the way that you do that is you just simply look at what the historical average appreciation rate is for your market over the last 10 years, 20 years, 30 years, 40 years, as far back as you can go for the data that you have. The data shows that in Jacksonville, each year on average, we appreciate at a rate of 4.6% per year on average. That's going all the way back since 1982 until today. And if you compare that to other comparable cash flow markets across the country, that's where Jacksonville really stands out. And we have about 25% higher appreciation on average than typical comparable cash flow markets like Birmingham, Cleveland, Dallas, Memphis, Kansas City. If you just kind of average those out, we're about 25% higher growth than those. And that really is what separates Jacksonville. Because when you hold on to an asset for 10 or 20 years and you experience significantly higher appreciation, that is where the vast majority of your return on investment is going to come from when you hold on for 10 or 20 years. It's not going to come from the cash flow. And so Jacksonville, just as a market itself, has been that place that we have absolutely believed in investing in from the very beginning. My business partners and I own over 300 rental properties in the exact same neighborhoods as our clients do here in Jacksonville. And we've been all in on it since the beginning of when we started to invest here. However, our job is to deliver the best risk-adjusted return on investment. And so a couple of years ago, we started looking at the opportunity in downtown Jacksonville. And what's very clear is that if you choose the right market and you know historically how it's appreciated, you're going to have a pretty good idea of what that average appreciation is going to be going forward, assuming that everything sort of stays the same, right? There's no big market shift. There's no big, surge of employers that come to the marketplace, or there's no big defection of employers that leave the marketplace. You have a pretty good idea. So that's kind of what our mentality was. And we said, well, how can we shift that curve up, right? As real estate investors, no matter what supply and demand does, if homes aren't affordable, you have a cap on your return on investment. And so for us, for our investors, for the $750 million of real estate assets, we don't like the idea of a cap on our return on investment. And we look at what was going on in downtown Jacksonville, and we have this blank canvas. We're right on the river. We have this wonderful experience living here. It's this outdoor lifestyle, no state income taxes. We're on the beach, right? We have this wonderful weather in Florida. People are coming here, but downtown Jacksonville has never really worked prior to now. We only had about 3,500 people living in downtown Jacksonville as of about 3 years ago. And we said, wow, if we can be a major force, a major impact to help downtown Jacksonville revitalize and really tap into the potential that it has, just like other cities have, like Tampa or Charlotte or Denver or Nashville. Wow, what effect could this have on the real estate holdings for all of our clients all around Jacksonville who own those rental properties? And so there's about 2,500 properties that our clients have purchased, and they're in those neighborhoods surrounding downtown. That's just where we invest. We've always invested there. And so we looked at that and we said, well, this is an opportunity for us to have an impact. If we can be a major force in revitalizing downtown Jacksonville, then we can help raise population levels in downtown Jacksonville. When that happens, it helps raise rents in downtown Jacksonville. When that happens, more amenities come into downtown Jacksonville, bars, restaurants, things that people like to do. And it creates this flywheel effect of more people living and working downtown. And when that happens, more employers come in and median incomes start to rise. Median incomes rising are so critical for long-term growth and long-term return on investment. So that was the first thing we looked at. We said, well, this is something that we can have a major impact for all of the holdings of all of our clients. And another reason for somebody to choose to invest in Jacksonville with JWB than investing in, another market with another provider who might be, in 10 different markets and not have that outsized impact in one.
Why is it that downtown Jacksonville was not thriving like it should?
I think a couple of things that really stand out as to why downtown Jacksonville really hasn't accomplished what it should have, in my opinion. It has been just this untapped potential for so long. I think what was really missing for downtown Jacksonville was somebody being an advocate for downtown. We have a city council here who makes our decisions here in Jacksonville, and there's 19 city council members who are responsible for making those decisions. And they basically represent all different parts of the city. And they all have stakeholders in different parts of the city. Well, for many, many years, there was not a stakeholder who was speaking specifically for downtown Jacksonville. And so, probably about 7 years ago now, 8 years ago, we created the Downtown Investment Authority, which in essence became that advocate for downtown Jacksonville. And they started to make sure that they worked with folks to create incentive packages so that big developers and small developers could come into downtown Jacksonville and take buildings that have been vacant for 30 years where the numbers just don't pencil out, and to create an incentive package so that the numbers can work, so that a developer like JWB can come down there and say, well, geez, we know this isn't going to be the best return on our investment, but at least somehow it makes sense for us to come in here and do this. And so, that didn't happen before the Downtown Investment Authority came in. So I think that was a major, major part of it. There is so much momentum now between public and private now that we just haven't had. So it starts with strong leadership from our administration and the mayor's office to prioritize this and to work hand in hand with the Downtown Investment Authority. I mean, that has been a wonderful thing. And then just frankly, the private community, the private businesses and developers here, there's just so much momentum. And, this idea of kind of turning the tide for downtown Jacksonville is not going to be accomplished by one developer. We're lucky that we have an owner of the Jacksonville Jaguars, his name is Shad Khan, who is very instrumental in downtown Jacksonville and is a major force for it, but he can't even do it alone. What you need clustered development. You need small developers as well as big developers coming in and taking down sections of town to really make an impact and to change the impression where people want to come downtown and live and work and eat and go out to eat and enjoy a show. So really, that's probably the third component, is the clustered effect of smaller developers coming together and working together and saying, okay, hey, listen, I'm going to take this parcel, you take that parcel, or whatever, however it works, they take that parcel, but we talk about how we're going to develop those parcels together to make sure that the best experience can come to somebody who wants to live and work and eat and play downtown. So we're just riding a really strong wave of momentum here. And, like I said, I've been living here for about 17 years, and we've seen ups and downs as far as momentum in the past, but this is the first time that we've had that advocate for downtown. We have the wonderful leadership of our administration, and we have this momentum and clustered development of everybody coming together. And that's why this time is going to be different.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com.
If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB & Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Yeah, that public-private partnership that you're talking about, that is so key, because that exists here in Grand Rapids. And it's existed probably for the past 20, 25 years with the DeVos, and people from Grand Rapids will know the DeVosses and the Van Andels, the Sekias, and they've really, ultra high net worth families that have really put their money into buildings downtown and doing exactly what you're talking about, bringing them back to life, bringing activity and excitement and vibrancy to neighborhoods downtown. And you see it in Detroit with Dan Gilbert, who has done the exact same thing. But it does require that partnership, and it does require some ultra high net worth families or groups to come in and really lead the charge. Where do you fall in that? Are you in the ultra high net worth lead the charge, or are you kind of coming in the wake there and bringing your investors into?
I'd say it's all relative. We do well, but the reality is that these projects are super capital intensive. And I think even beyond just your ability or your net worth, if you're ultra high net worth or whatnot, your long-term horizon and your commitment to doing something, knowing that you're not going to earn the best return on investment, has to be really, really strong. Just like, for example, for one of our projects that we're working on in downtown Jacksonville right now, it's called the Old Federal Reserve Building. It's a 3-building project that we're working on. And these 3 buildings have mixed use. So we have some apartments, we have some high-end event space, and we have some restaurants, and there's going to be the outdoor patio. It's this really wonderful thing that we're putting together. It's right across from City Hall in downtown Jacksonville and whatnot. Well, just this one project is a $20 million project. Now, we do okay, but $20 million on one project, we've never done that before, right? And when we look at the financials, after we get our city incentives paid back, after we finish the construction of the project, which will happen later this year or early next year, our return on our investment from that project, our cap rate is about 2%. So, that's not a good investment. But I would never go out and make a real estate investment out there and require a 2% return on our money. But we are doing that because our value here is more well beyond just what can we return in rental income and net income this year. It's really because we have a love for Jacksonville. We feel like this is a once in a lifetime opportunity to put a mark on our city. We feel like we'll win in the long run because we think Jacksonville is the rents in Jacksonville are going to be growing significantly, which will increase our values over time. And we think that our clients are really going to win. So we're going to win that way as well. But there's just not a lot of developers that would go in there and be okay with the 2% return after incentives. So you got to have deep pockets to do things like this, but you also have to have a long runway and really see value in things beyond the dollars and cents. And I think that's probably what keeps more people away from doing it, even some of those ultra high net worth individuals, because that just doesn't align with how they want to make decisions right now.
How about the other component that you didn't mention, which is the neighbors? And I'm wondering if you're running into that buzzsaw of NIMBYism as you try to improve these neighborhoods.
It's something that we have thought a lot about and consulted with other cities who have gone through this type of transformation. I feel like we've learned a lot. And I believe there's a way that we can do this where everyone can really win. There's a concept called withintrification. Withintrification would be the different than gentrification, which many times has a negative connotation to it, right? Withintrification really means working with the stakeholders in those communities to understand what matters to them and to help them accomplish their goals, as well as helping that city or that part of the neighborhood become something that can be improved for the overall benefit of the entire community. And so spending time and talking with those stakeholders and understanding what's really important to them, listening to them, and then doing things that matter to them. Like, for example, the design of the housing is something that really matters to some of the folks that we are working with in those neighborhoods. And, as new housing comes in, creating standards of how that housing can look and should look is really important. Well, that's something that can absolutely be done. What that may do is that may increase the building costs of all of that housing in that neighborhood. And, that might be something that's not a good return on that investment dollars and cents wise. But if you can give something to the neighborhood, right, that there's real value there to have people working together to welcome the change that most likely is inevitably coming. So this concept of withintrification, I think, is something that, it's something I know we believe in. And it's something that's had a lot of positive impacts across the country and other places that have gone through something similar to this. So it doesn't have to be either or. We really can work together as long as the developer is willing to spend a little more to give something up. And the reality of the way we think about it is like, if we do this really, really well, there's more than enough to go around for everyone. There's more than enough to go around for developers. There's really more than enough to go around for the city, for the community. There's certainly more than enough to go around for the folks who have been living there for so long to make sure it's something that they can still be proud of, they can still live in and work in and still feel and know that it is their own. So that's what we're really focused on.
I'm hearing two different things from you. One, you talk about the focus on the single family investing and buying single family homes. But then I'm also hearing with gentrification, buying up these city blocks, repurposing old buildings, rehabbing old buildings, bringing retail, restaurants, commercial use. You've also said, well, you're only focused on single family investing. So square that up for me. I mean, are you wearing two completely different hats, or how are you handling both?
Our business is we are here to make investing in single family rental properties easy for investors and to deliver the best return on investment for them that we can, right? If you're only working with somebody who's offering you a property to invest in a certain market or whatnot, and maybe or maybe not, maybe they don't do the property management, maybe they outsource it, whatnot, right? If you're only working with an organization who's really thinking about that and collecting your rents today and all that and keeping maintenance low, well, they're really not focused on the problems and the opportunities that are coming over the next 10 to 20 years. And, being a vertically integrated provider here in Jacksonville, I think that's a threshold that not many other turnkey rental property companies ascribe to, right? Turnkey really is there to sell you the house, do the property management, whether it's in-house or not. Of course, they had to renovate the home. Sometimes they own the home, sometimes they don't. Sometimes they own the property management company, sometimes they don't. But it's really about the here and now. A vertically integrated company like JWB, we need to think about things that are a lot longer time span. Because my job is to take the money that you entrust to me and to my team and to deliver a lot more back to you in 10 years or in 20 years, because you've already agreed and subscribed to that buy and hold mentality. Well, if you're going to do that, you need to be thinking about the growth and the opportunities and the median incomes in your market. And you need to be having an impact on that. So we are here to deliver single family rental properties to folks who want to invest in a growth market like Jacksonville. That's all we do. That's all we offer. If you go to JWB's website, it's going to talk about investing in single family rental properties. But the way for us to maximize your returns on investment are to work on the biggest opportunities to scale those returns up, which in Jacksonville is right now being a major player in downtown Jacksonville. So that's really kind of where we land. We do this not because we're going to downtown Jacksonville so that we can buy a property and then syndicate it out and sell it or raise money or do anything along those lines. This is really us using our own money and our own influence to build up downtown. Because when you build up a major downtown like Jacksonville and you start to see what effect that has on rents and home prices for the neighborhoods that are within a 15-minute drive, it's astounding, right? If Jacksonville's home price appreciation rate is it's 4.6% year over year on average for the last 40 years, this is an opportunity to scale that up. If we can have downtown attracting the type of employers, attracting the type of talent, and then those types of folks come and move and live in downtown and raise rents and all this good stuff, right? We might be looking at a big shift up. Maybe it's an average of 5% home price appreciation we could see over the next 10 years or 20 years, right? It's too early to tell what that could be, but that's the mentality. How do we have an outsized impact on what that appreciation rate is beyond the wonderful fundamentals of Jacksonville? And to do that, we need to go in there and we need to buy 19 city blocks and that number's raising. So that's really it. It's to support the main thesis, which is helping people invest in single family rental properties and getting those outsized returns on investment. And this is where we feel like we can have the biggest impact.
How can people find out more about you and possibly get a hold of you?
Well, thanks so much for the opportunity. If anybody's interested in investing in Jacksonville here with JWB, you can just go to our our website. It is jwbmakeseateasy.com, jwbmakeseateasy.com. You can view current inventory and properties, get familiar with our returns on investment. And Brian, I've loved your show and appreciate the opportunity. We also have a podcast. If anybody would like to learn more about JWB, and our show is called the Not Your Average Investor Show. You can find us wherever you find your podcast. And we also do a live audience. We have a live audience every Tuesday and Thursday at 12:30 Eastern. If you'd like to join the live audience, you can register for free at nyais.com, nyais.com.
It's been really interesting talking with you about Jacksonville and how you created this single family home portfolio with your investors, but now you're also concentrating on creating a thriving downtown. You control 19 city blocks, which you said was what, like 20-30% of the downtown?
Not there yet. There's 140 blocks in downtown. So it's about 12% right now is what we own.
All right. Well, that's a pretty good bite there. Congratulations on that, and good luck with transforming it into the vision that you have. Thanks so much for having this conversation with us today. It's been a real pleasure.
Thanks, Brian.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com.
And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.